Tuned into Midcap Radar, and let's now talk about our special segment Midcap Spotlight. Sonal, you're talking about NOCIL today. It's up 4.5%. Tell us why.
The global peer, the Chinese peer of the company, they've put out a Q3 business update. Now, remember, this particular company makes rubber chemicals, and they did see volume pressure and pricing pressure in the quarter gone by. They spoke about how Chinese companies are dumping goods at lower prices, and that was something that impacted their realizations. Now, this Chinese company talks about their Q3 update, where they're talking about how volumes have actually increased. This is, of course, calendar year 2023 update. They say volumes are up around 16% on a YOY basis to come in at 56,114 tons. This is the highest ever quarterly sales volumes for the company. But sales revenues, they are down 5% on a YOY basis for the company. And how did this happen? Because their average selling price has declined 18% on a YOY basis. It is because they actually adopted a flexible pricing strategy to ensure more volumes, and also because raw material prices have come down. So it does indicate that pricing pressure could continue. However, this also indicates that volumes are going higher in the Chinese markets, the economy which was not doing so well, and that's why Chinese companies were going out and dumping goods at lower prices. The company says the production utilization rate of Chinese tire manufacturers has improved substantially in Q3 of calendar year 2023. The competition in the Chinese rubber chemical industry remains very competitive. So yes, there could be some price pressures. However, they remain confident about the group's profitability in the next 12 months, and net auto sales in China is up 8.5% on a YOY basis. So two takeaways here: that yes, there could be pricing pressure which could continue. So ideally, it's not positive for the likes of NOCIL, but the fact that demand in China has come back, it could mean that Chinese players will not go outside and dump these goods. They will use these pricing mechanisms and will only keep selling in their own country because of higher demand. So yes, maybe on the back of that, there is some positive commentary that Chinese demand has come back, and that would mean positive for Indian players. They've been seeing a lot of dumping by Chinese players, so that has come as a relief for the stock.
All right, and you can clearly see it in the price as well, almost 4.5% there on NOCIL. Sonal, thanks for getting us all of those details.